Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Lizzy. We're an hour away from the opening trade. Here's what you need to know. UK Chancellor Rachel Reeves struggles to maintain the confidence of investors as rising gilt yields and the pound remain under pressure, further threatening the UK's public finances. And it's Jobs Day in America. Economists expecting yet another hot number, reinforcing talk of U.S. economic resilience. And sticking with the states, Los Angeles contends with even more wildfires as the death toll rises. More than 180,000 people are forced to flee. Lizzy.
Well, happy Friday. Checking in on these markets, Kriti. Of course, it is US Jobs Day and Wall Street's coming back in action after the National Day of Mourning for President Jimmy Carter yesterday. It's all eyes on whether we get a blowout figure today. The 10-year Treasury yield at 4.69%. Currently, Euro Stoxx 50 futures pointing lower. A little more optimism, shall we say, on FTSE 100 futures, but it's the FTSE 250 you need to keep an eye on, given it's more domestically focused. We've seen the pound at a one-year low, but the Chancellor's deputy says that's orderly. The countdown to the opening trade starts right now.
Friday the 10th, good morning. Another big day for the bond markets around the world. We've, of course, got payrolls in the United States a little bit later on. Take a look at what is happening with sterling already this morning. That doesn't indicate a particularly positive session maybe coming through for the gilt market. Rachel Reeves, the Chancellor, has decided that she should go to China, a country which is also facing something of a bond market crisis, though of a completely different nature to what we're seeing not only here in Europe but also over in the United States. It's going to be a fascinating session ahead of us. We thought we would maybe get some quiet in the UK market. That doesn't look like it's happening. And big questions, Lizzy, being asked about whether Rachel Reeves should be back here dealing with this crisis or jetting off to China.
MIA is how her opposite number in the Conservative Party described her yesterday. The Prime Minister's spokesman said there was never any consideration that this Beijing trip would be cancelled. So it fell to her deputy, Darren Jones, to defend the moves. He said they were orderly. He claimed as well that he couldn't afford a Bloomberg subscription. Maybe he would have used different language if he could.
Absolutely.
Yeah, that's quite the statement. When it comes to these markets, I thought it was interesting. We talked so much about the pain in the markets, the FX story yesterday, the bond market story yesterday. The FTSE 100 closed higher and outperformed the entire European continent.
Of course it did.
But is the currency story then some sort of incentive then for international investors to hop in? This goes on to the theme that we've been talking about. Is Europe so undervalued that's too cheap not to own?
It's just a mechanical process. These companies have international revenue streams. You have to revalue those revenue streams. It's always been the case. FTSE 100 up, sterling down, and vice versa. The 250, to Lizzy point, is maybe the more accurate representation of what is happening here in the UK. That is under pressure.
Yeah, and look, in contrast to the word orderly, the language being used on the trading floor at Citigroup is apparently that sterling is now the great British peso. If you look at Wells Fargo and Deutsche Bank, they're saying that there's room for it to drop further, so we do need to keep an eye on that today. Meanwhile, Starmer talking to Macron while Reeves off to Beijing.
Which of those is the two most... You could argue that the Macron meeting is much more important. That's where the UK potentially has some room to make gains economically, easy levers potentially to pull with the EU. Is Starmer now prepared to do that with the crisis boiling at home?
Or do you need to invest in those who are coming to power in those relations as you look across the pond to the US?
Yeah, it's certainly something we're going to be keeping an eye on. And is that going to be this next leg of the Treasury move as well? Because globally, you have, as we talked about, seeing the sell-off. That's part of the UK move. It's certainly something we've seen in the States. We've seen in OATs as well. The 10-year at 468. The jobs number expected to be fairly hot yet again. And Bloomberg Economics, actually the standout contrarian in terms of just how hot that's going to be.
The whisper number on the Bloomberg terminal, love that function, WHIS, is in the 80s. The estimate coming out of The Economist is in the 60s, 160. So you've got 160, 180, but Bloomberg Economics is way higher than that. If this could confirm, or should confirm, if we get a hot number, the fact that the Fed is likely to be cautious. Is the Fed is the market right to be pricing just one cut from the Fed in 2025?
Exactly. If you get this blowout number, it kind of adds fuel to that talk of US exceptionalism. It supports the caution on easing. you could see maybe the idea of, if it's just a reversal, say, of the hurricane effect in October, let's see how much that offsets the impact. But I'm interested in how much it's a catalyst for another move higher for yields here in the UK on Gilt.
Yeah, it's something that, is it the dog wagging its tail or the tail wagging its dog? But this might just be a temporary number. There are plenty of other factors that could, of course, weigh on the eco story in the U.S.
Do you see the comments from Jeff Schmidt yesterday talking about the fact that maybe actually we're already at neutral?
Yeah.
That would be an incredible revelation
surprising.
if it were to turn out to be true.
Yeah, because it kind of comes out of nowhere. They're still talking. I mean, as recently as I want to say last week, there was still commentary coming out from the FOMC that there is cushion to the downside. They just want to kind of keep that firepower for later.
Let's talk about what is happening in Los Angeles and the fires that we've been watching, obviously developing over the last few days. Some evidence maybe actually firefighters are getting some of these fires under control. But the numbers are starting to come through in an alarming fashion. Clearly, obviously, the loss of property, the loss of life, the human cost here is absolutely enormous. But we're beginning to be able to quantify to a certain degree what the cost is going to be. JP Morgan estimates now suggest that 20 billion in insured losses. That's doubled in 24 hours. Yeah. AccuWeather, not sure where this came from, but it's 130 to 150 in total losses. That's one of the worst financial crises, one of the worst catastrophes in terms of weather that the U.S. has ever experienced.
Yeah, it's a pretty interesting one. And at the same time, by the way, in the last 24 hours, Joe Biden making the claim that the federal government is going to be covering 100% of the cost, not just disaster relief, home reimbursements, et cetera, at a time when that liability insurance that we were talking about has actually been on the down. It's just been too expensive. People have chosen not to insure.
Yeah,
and California's relationship with Trump has always been really interesting.
Exactly.
As well.
But also interesting that it's not likely to trigger those major losses for cat bonds.
Yeah.
Only 12% of the market actually exposed to wildfire risk. So it reminds you of Hurricane Elon and Milton as well, when they just didn't have to pay out.
And on top of the wildfires in Hawaii as well, the money story is important. And this is going to show up again in the economics as well. California makes up 15% of national GDP. So this is going to show up in the data. It's going to show up in economic activity. We just don't know when.
Yeah, it'll show up in things like payrolls.
Yeah.
When we will wait and see exactly what effect that ultimately has. What else have we got coming up on the show today? We need to talk about what's happening with the UK. We're going to do that. Ruby Osman, Tony Blair Institute Policy Advisor, is going to be joining us alongside Vince Cable, former UK Business Secretary, around the desk. We'll debate, A, whether Reeves should really be in China right now, where does the UK go next, and how these two stories really interact. Wolfgang Rothberg, Jay Safra Saracen, equity strategist, joining us a little bit later. He's quite cautious about how he sees this year developing. And are we inching towards a French budget? And what does business want out of that budget? Fabrice Lassache, France's Medef Business Lobby Vice President, is going to be joining us here in London to give us a take on that, Lizzy.
So that's what's on the programme. In terms of what else to watch out for today, at 1:30 p.m. London time, of course, we get US non-farm payrolls. At 3 p.m. London time, it's the University of Michigan consumer sentiment. And then before market, we get Delta earnings as well.
Just heard from Delta talking about what they're going to be doing in the tech space. That was fascinating. What else do you need to know this morning? Let's talk about the stories that we are focusing on. Wall Street banks are said to be planning to give traders and deal makers their biggest bonus increases since the pandemic. People briefed on the plan say bonuses at Bank of America will rise by an average of 10%, with JP Morgan's investment bankers getting roughly 15%. We are told that Goldman Sachs will go even further on some of its trading desks. TSMC, the go-to chip maker for Nvidia and Apple, has delivered a quarterly sales increase of 39%. That tops estimates easily. The increase has been driven by growing demand for AI hardware. The strong performance from the world's largest maker of advanced chips will boost investor expectations that the AI hardware boom will continue into 2025. Taiwan's biggest company will release its full earnings report for the previous quarter next week. And speaking of chips, Nvidia has criticised new export restrictions that are expected to be announced soon and were first reported by Bloomberg yesterday. The company has accused the Biden White House of trying to undercut the incoming Trump administration by imposing last-minute rules. The looming changes would cap the sale of US AI chips on both a country and company basis. Nvidia Vice President of Government Affairs said, quote, "The policy will only harm the US economy, set America back, and play into the hands of US adversaries." There's also another another tech stock story that we should be watching carefully today.
Yeah, I mean, of course, we all have our eye on Nvidia, and we don't really think of TikTok as necessarily a story that you can trade. They are appealing that TikTok ban story in the Supreme Court today, trying to prevent a proper ban of TikTok as of January 19th, one day before Donald Trump takes on the presidency. This is a really important story simply because there is actually a ripple effect. And outside of social media companies, there's a ripple effect. There's a conversation here as well about Oracle, for example, which TikTok is one of its biggest customers. So that's going to affect its bottom line. Google, Apple is now basically going to be mandated to remove it from its app stores as well. And the Meta could actually get a little bit of boost. So even though maybe today this might not be tradable, there are some tech themes here that could play out in the next couple of weeks and months.
There are going to be big winners and losers out of this. Oracle potentially could be a big loser. Maybe Meta would be one of the biggest winners. How the industry adapts to this will be absolutely fascinating. But is this something that Trump can come through and reverse?
Exactly. It's an argument between free speech and national security, which is essentially down to deference to government, and it reveals that split potentially within the Trump team. You know, Trump kind of pushing for this to be delayed, but members of his own team backing restrictions. So already he's not even in the White House yet.
I mean, not just pushing it, filing for it now. He's not just talking about it. He's filed with the Supreme Court saying that he, as a deal maker, can kind of bring this deal to fruition if you just give him a little extra time. We showed that graphic just a moment ago, talking about potential suitors like Amazon, even like Walmart, like Microsoft. Again, if we're talking about these bolt-on acquisitions from some of these Mag 7 names, TikTok may be a key piece to that equation.
Does slightly bring me back to the UK story as well. The US is so concerned about what is happening with China, this debate about China and national security. And the UK is having this huge debate about national security as well, yet the Chancellor's in China trying to do deals there. It's quite interesting how maybe the UK is going to have to pick sides. You can almost kind of fold it into this wider narrative of what is happening in the United States.
Yeah, this kind of mixture, or conversion between the business story and the political story. Coming up on the program, we're going to continue that very conversation as the world's richest person, Elon Musk, has waded into Germany's election, hosting a conversation with far-right candidate Alice Weidel on his X social media platform. We'll discuss the implications ahead of the country's federal elections next month. Plus, Airbus expects to return to pre-pandemic delivery levels in the foreseeable future due to surging aircraft demand and its advantage over rival Boeing. We're going to break down the plane maker's delivery figures later in the show. But up next, we'll be joined by Naomi, Fink, Chief Global Strategist over at Nikko Asset Management, joining the program this morning. If you have any questions of your own or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
I still see us on a downward policy rate path. Looking at everything before me now, I'm not about to walk off this path or turn around. But the exact speed I continue to go along this path will be fully dependent upon the incoming data. We can stay where we are for a little bit, probably not long, but we'll see.
Philadelphia Fed President Patrick Harker speaking yesterday. He's slowing down. Others are sounding out the alarm, maybe about the need for a stop in terms of those cuts coming through. Is today's data, is the payroll number going to confirm that? We are likely to see a reasonably healthy labour market. That's certainly what the estimates point to. 165,000 is the survey number. But I have to say, there's a lot of higher numbers than that, can't speak this Friday, floating around. Valerie Teitel's here to walk us through all the details.
Guy, I want to point out that we heard those comments from Harker saying that rates are on a downward path. We heard quite an opposite call from the Fed's Michelle Bowman yesterday. She called the December's cut the final step in the recalibration phase. She's worried about inflation. She actually said she thinks it's inflation concerns that have drawn Treasury yields higher. That is a juxtaposition to other things we've heard from Fed officials who blame term premium, who blame supply and demand factors in the Treasury market, not inflation, for this recent bout in yields. Also interesting to hear her speak on the bank capital rules. She was calling for looser rules when it comes to bank capital restrictions, and that's important because she is touted to be replacing Michael Barr as vice chair of the supervision. It's musical chairs in Washington. We also have confirmation that Scott Bessent Treasury hearing is taking place next week on January 16th. Be interesting to hear from him what he thinks is driving the bout higher in yields. Before we get to that, we have non-farm payrolls on deck today. 160 95K is the consensus call. Bloomberg Economics is citing, though, the risk for a blowout payroll report number. Their call is nearly 100K higher than consensus. And the risk is there, Guy. It's not a risk for the Fed. It's clearly a risk for the UK government and the outlooks for gilts. Will we see another destabilization in the gilt market on the back of a hot print? Very interesting to see that even though we did see some stabilization in the gilt market yesterday, there was still a lot of volatility, a lot of volumes when it comes to options trading in the currency market. When it comes to the cable pair, we have seen and reported a lot of hedge funds who are buying puts, so buying downside protection on sterling, on cable. Very much the thought out there that to tempt foreign buyers back into the gilt market, we're going to need to see a further devaluation in the pound.
Our bond market, your problem. The message maybe from the United States to the UK, though I would argue maybe as we head towards 5% on US 10 years, it could be the US's problem as well. Val, thank you very much indeed. Joining us now to carry on the conversation, Naomi Fink, Chief Global Strategist at Nikko Asset Management. Naomi, thank you very much indeed for joining us. How much higher do you think bond markets are heading in terms of yields in the United States and by extension, maybe the UK?
Well, I think in the United States, for the moment, we have some pretty good economic fundamentals. So although there might be some risk premium going on there, there's probably also some element of robust economic growth expectations. However, I do agree that tail risks have risen. And if we do see worryingly strong inflation, not just strong job numbers, but inflation that doesn't seem like it's going to keep getting better behaved, then it's we have the potential for upside. And I think one thing that the UK and the US share is that they're large current account deficit nations, which also have pretty large debt to GDP.
Yep.
So it's there's some
the UK move to a certain extent. The UK move has been relatively quick. We've been tracking towards 5% over the last few weeks also in the United States. If we get a solid print today, let's call it plus 165, somewhere north of that on the payrolls, plus also we get a strong CPI print next week. We've got CPI and PPI out of the United States next week. Does that take us to 5%? How quickly could we get there?
Well, I mean, I think it's like it's really dependent, whether we hit 5%. When that's really dependent on how the fundamentals unroll. So, for example, if we do get a very hot print and we start seeing inflation expectations rise, and we start getting worries about the fiscal deficit and potential for not fiscal profligacy, then that will get us to 5% a whole lot quicker. That's not my central scenario, but these are the risks.
Naomi, it's Kriti in London. When we're talking about those deficit concerns, though, this is a theme that we've seen, of course, in the United States, as you mentioned, certainly now in the UK. We're talking about in France and in other parts of Europe as well. Is there a relative trade between those regions, or is it as simple as just steepen the curve across all three?
Well, it's hard not to see curve steepening given the uncertainty about inflation and, across several regions, the uncertainty about debt and the sustainability of deficits going on, especially in current account deficit nations. The one thing that Europe has is a mix of surplus and deficit nations, and on aggregate has a surplus. So that's where we see a significant difference between Europe, the US, and the UK. The only thing that with Europe is that growth is pretty stagnant right now. So probably we are reliant on the ECB cutting a little bit further, especially if we don't get some additional fiscal stimulus in the region.
Naomi, a big piece of the conversation as well has been, at least for those who are saying don't panic just yet, is that this is a strong move, but perhaps not similar to the panic that we saw in the third quarter of 2023, which really had ripple effects around the world. Walk us through what that move, the margin of the move, may look like where you are starting to panic.
Well, yes, I have to say I'm not starting to panic, and the current moves that we're seeing are not really emblematic of panic just yet. I would like to not only look at 2023, but other instances of sudden spikes in yields across the globe. For instance, I think there's been some question of whether we're likely to see another Liz Truss moment in the UK. The situation is very different right now. We don't have this financial situation of liability-driven investments covering, and what we do have right now is a lot of uncertainty. And I think what we're seeing in the long end of yield curves worldwide is price discovery. So there's a lot of noise right now, especially on the political front. After elections tends to be a very noisy time. Also, there's a lot of weighing the positive growth and slightly higher than desired inflation, and then what type of risk premium you're supposed to put on for things like large debt to GDP. It's a discovery process. It's not really a panic at the moment. I think if we did have a catalyst that drove inflation, or potential signal that debt was looking extremely unsustainable or unlikely to bear the tax policy that the UK or the US put in place, that would be a catalyst. But we're not there quite yet. We're still in wait and see mode.
Exactly. So, Naomi, in March, if Rachel Reeves doesn't cut spending or she doesn't raise taxes again, and she says she won't, what happens to gilt yields?
Well, for the moment, I think there is something that's very convenient, which is that gilt yields, depending where you look on the curve, can be competitive versus the U.S. Treasury yields. And then that can keep gilt yields contained for the moment, because I think a lot of global investors are struggling to get diversification away from, for example, U.S. equities, and U.S. Treasuries don't provide the same type of negative correlation they used to. So there might be some desire to buy the gilt on dips, for example, for this reason, and probably similarly for the British pound. Although the US dollar may strengthen broadly against a basket of currencies, including the British pound, perhaps if we do see some dips going on there alongside gilts, there could be some appetite to diversify again and keep that move contained.
Well, just very briefly, Naomi, do you expect fewer Bank of England rate cuts because of the gilt yield moves we've seen?
Well, I would be hesitant to say the Bank of England is gearing off of the interest rate moves. The Bank of England is probably going to keep a solid eye on inflation and inflation expectations, and also fundamentals in the UK. So if we do start seeing inflation expectations run a little bit hot, for example, yes, I would expect the Bank of England to enact fewer rate cuts, but that's also kind of where we're dependent on the data for that.
All right, Naomi Fink, Chief Global Strategist at Nikko Asset Management. Really lovely to have you with us this morning. We thank you for joining us as we look ahead to that US jobs report, and we keep an eye on the gilt market as we get towards the open. We're going to stay on the UK next. Chancellor Rachel Reeves embarking on this mission in China to deepen economic ties with Beijing. It comes, though, against this backdrop of market turmoil at home. Should she have gone? We'll discuss that cooperation with Beijing and reviving the government's growth agenda next. So do stay with us for that conversation as we look at FTSE 100 futures lower 0.2%, and the pound also weaker 0.2% at $1.22. That's coming up next. This is Bloomberg.
Thirty minutes away from the start of the opening trade. You look at the futures picture, you are seeing risk sentiment under quite a bit of pressure. Remember, this perhaps comes in terms of retracing some of the move yesterday. Green on the screen across Europe yesterday, and some outperformance in the FTSE 100. That is not how we started the session 24 hours ago. This morning, of course, you are seeing perhaps a little bit of a retracement in the opposite direction, but underperformance over in the States, not necessarily here. I want to take a quick check on the bond market as well, because that's, of course, where a lot of the focus is for the UK in about 30 minutes' time. In the meantime, looking at Europe, you are seeing, again, marginal moves to the upside, perhaps a little bit of following the Treasury move as well, in perhaps anticipation of what the UK gilt market open might mean.
Looking for that in around 30 minutes' time, as you say, Kriti. We are seeing yields tracking a little bit higher. The pound is down this morning once again against the US dollar. The cable rate currently trading at 122.90. Little move off the lows earlier on, but nevertheless still in negative territory. We've got a situation that is developing and continues to develop here in the UK. The Chancellor has made a decision, though, to go to China. It was a prearranged trip. Was it the right call? China often has been the foil, maybe, to UK crises. We've certainly seen that in the past. Who can forget the time when David Cameron sat down in the pub for a quick pint of IPA with Xi Jinping?
Exactly. Pint glass clinking. That incredible moment when the Conservative government was really pushing for a golden age in UK-China relations. By 2022, though, Guy, Sunak was claiming that China was the largest threat to Britain, the world's security and prosperity. But now Labour's trying to reset ties with Beijing. Reeves is going out there with Andrew Bailey, the governor of the Bank of England. They're going to try and get opportunities for the financial sector as well. It doesn't stop the fact that the timing here is risky. We are just over a week away from Donald Trump's inauguration. Members of his team have already said that this could look like a crack in the resolve between the UK and the US, but also the West generally. Bear in mind that Peter Mandelson, the new UK ambassador to Washington, has been a long-time advocate of better economic ties with China. That might not endear him to the new US administration. And meanwhile, the EU's trying to put pressure on China over the war in Ukraine, and both the US and the EU have put these tariffs on Chinese electric vehicles, and the UK is staying out of it. So, look, there's a lot of risk here in the short term, and yet is there that much upside, given we're told not to expect any big announcements out of this trip? Should Reeves have even gone to China with the market rout happening here at home? Let's discuss now. Round the table, we're joined by Sir Vince Cable, former leader of the Liberal Democrat Party, who served as the UK's business secretary from 2010 to 2015. And also around the table this morning, Ruby Osman, China lead at the Tony Blair Institute for Global Change. It's great to have you with us both this morning. Sir Vince, should Reeves have cancelled a trip given the market turmoil?
No, in my view, not. Several reasons. First of all, it just amplifies the idea of panic. I think Naomi Fink said a few minutes ago, we're not in a panic situation. There's no reason why the government should create one. And secondly, China is an important player. The fact that China's currently in a bad period economically, they've got to be urged to put more emphasis on consumption, boosting the world economy. We've forgotten now that back in the financial crisis, they saved the world economy. They're not in the position to do that now, but they're big players, and it's important that we engage with them as a country.
But can the UK simultaneously befriend the US, the EU and the UK?
It's got a hedge.
And China.
Yeah, we've got a hedge. I think we've seen in the last week or so different reactions to the Trump administration. Trudeau crawled obsequiously and, he's out of a job. And the Americans don't respect that anyway. The Mexicans, who are very weak position, been very firm. They're not going to be pushed around. I think Britain has got to be equally firm. We have our own agenda, we have our own interests, and building up closer relations with Europe, but also keeping in play a working relationship with China is an important part of the mix.
Ruby, if I can bring you in, do you expect blowback from Trump for this?
I think it's really hard to predict what we're going to see from incoming President Trump, but I think the one thing we do know is we're going to see a much broader spectrum of possibilities in the US-China relationship than we have under President Biden. So I think from a UK perspective, it's more a question of planning out for those scenarios. I think EVs are a great example. There is a chance that we come under a lot of pressure to follow the US's suit in implementing tariffs. There's also a world in which that doesn't even feature on the top 10 list of items the US wants to address with us. And so I think the smartest thing the UK can be doing is, as Vince says, doing a little bit of hedging, stabilising our relationships where we can, and doing some of that forward planning for what might be a tricky couple of years.
What could come out of this, though? What is the upside in this trip? It stabilises relations, it puts relations maybe back on a more even keel, but you do wonder what China wants out of the relationship. Are there wins to be had here? Should we be encouraging Chinese car makers to build factories in the UK? Are there small industrial wins that we can get out of this that at least provide some positive headlines?
My sense, I think, if you look at the readout that came from President Xi and Keir Starmer's meeting in Rio, is that both sides are just looking for that stability. I think they use the term no surprises.
Yep.
So I think you're right. I don't think we're going to see anything seismic come out of this, but I think it's more a process of refamiliarizing each other, right? This is the first EFD we've had in 5 years. It's happening in a very different climate to 2019, let alone to the golden era a few years before. And so I think probably the main thing the government will be looking for is just getting to know each other again and setting the groundwork maybe for bigger bits of cooperation down the line.
Vince, isn't the UK just going to have to pick sides, though, at some point? Isn't that the world we're heading increasingly into? Can you befriend China and the US, to Lizzy's point, simultaneously? It feels increasingly like a binary world. You see that day after day. The Biden administration has just enacted new chip embargoes on Chinese companies. Nvidia's kicking back against that. But ultimately, the US is on a very different trajectory, it feels, than the UK here right now.
Yeah, we're not talking about friendship. We're talking about having business-like relationships.
This is interests.
And yes, I mean, obviously there are some people in the US administration, by no means all, who do want to perpetuate this idea of the global West lining up against China. I don't think there's a market for that in much of the world. I mean, we've forgotten that over the last 20 years or so, the American share in world trade has gradually declined. China's increased. There are many countries, particularly in Southeast Asia, Africa, Latin America, who are hedging as between the US and China, and that's going to continue to be the case. So I think there will be enormous...
Should we? Is that what we should do?
Yeah, I think that's the right word. It's not befriending. Certainly we shouldn't have an obsequious relationship with China, but certainly deal with them in a business-like basis. And we do that with both superpowers. That should be the way forward.
Well, in terms of that negotiating power, though, where does the UK stand when China is one of the UK's largest trading partners? The UK doesn't even stand in China's top 15. What kind of levers can the UK pull in that negotiating?
It doesn't have directly a great deal of bargaining power in relation to China because we neglected it over many years, which is why, Germany and other countries built up big market shares there. But, there are other areas of common interest. I mean, we want the Chinese to be more constructive about Ukraine. Of course, they're behind the Russians and they're playing an unhelpful role, but in some respects they're pulling their punches. The Ukrainians, I was there about a year ago, are certainly keen to keep the Chinese in play for any peace negotiations, reconstruction, and I think we should be looking at that opportunity. There are issues like climate change, where the Trump administration is going to be a wrecking ball, but where the Chinese are obviously crucial. They're the biggest emitter, and basically they're interested in trying to solve this problem. So there are very big areas of common ground, not least, the future of the world economy, where, until recently, China was the main driver of growth.
Well, what is that enforcement mechanism? Whereas, for example, if we're comparing this to the United States, if we're comparing this to the EU, there are reciprocal tariffs that can be put in place. One of the key bull cases for the United Kingdom has been that insulation from the China threat in terms of the economics has actually helped UK assets, helped build an investment case for UK assets, whereas the US and the Europe can be sold off. What is the enforcement capability on those conversations?
Well, if the United States imposes strict enforceable sanctions, then Britain doesn't have much alternative to go along with it. I mean, we've already had the experience of Huawei, where I think the judgment from both economic and security grounds that it was in our interest to keep Huawei in a limited role. We were under pressure from Americans. We had to cave in. And there may be other areas where that will happen. But, within the freedom of scope that Britain has, and we're weakened, of course, because of Brexit, within the scope that we have, we should be maximising the independence to develop good relations with as many countries as we can.
But it's, to put it politely, some you might call it hedging. Others have accused you of appeasing Beijing. Ruby, is it really a bit naive to think that you can separate out the trade relationship from the geopolitical relationship when, there's human rights, there's the war in Ukraine, as you mentioned? Is this really something that you can do?
It's a good question, and I think in an ideal world, your security, making progress on security, making progress on economic ties are not mutually incompatible. I think you would struggle to find a country that takes its national security more seriously than China, and so I think that's a conversation the Chancellor can have in Beijing, so you can be quite clear that the UK, just like China, needs to think about its national critical infrastructure. The UK can also articulate its own red lines. And then you would hope as well that on the question of rights, that just because you're resuming this dialogue, that doesn't stop you for pushing for greater action to bring over Hong Kongers and support those who have come over to integrate. And I would say as well, if anything, the fact that these dialogues are even happening after the UK has welcomed in more than 150,000 Hong Kongers is hopefully proof that we can make progress on both fronts at once.
Vince, before we sat down, you said when you went out to Beijing, even though there was turmoil at home, it was because there was a plan. And it was good to be investing in the long term because you knew there was a plan. Does Rachel Reeves have a plan?
Well, they had a plan. It's been blown off course at the moment. And I broadly take the view, which I think your commentators have been saying, that this is predominantly an international issue. I mean, there is relative weakness in the UK because of our poor growth prospects, relatively high inflation, and the markets have clearly noticed that. But fundamentally, this is an international problem, partly caused by the Trump administration and uncertainty, and we shouldn't panic. In terms of whether we have a plan, I mean, what I've been arguing is we do need to have a kind of longer-term strategic approach, which in the coalition we call the industrial strategy, giving, 5-10-year time horizons to key sectors of the economy that need that investment assurance. And that's missing at the moment.
Well, we've had many of them.
Well, it certainly worked well in the period I was in government, and it helped to stabilise the investment climate. We should be doing that again. So I don't think we should be just, obsessed by day-to-day market changes. I mean, that's the route to disaster.
Ruby, the UK clearly needs growth. Is China going to provide that growth, or is a better relationship with the EU going to provide that growth? It's interesting that Keir Starmer was meeting Emmanuel Macron as well today.
Well, I think definitely the assessment that the government has made is if you're going to meet that ambitious target of having the highest sustained growth in the G7, a healthy economic relationship with China is absolutely part of that.
OK, so a healthy relationship, but China, in terms of the priorities of the government, how high should this be?
Yeah, it's a good question, and I'll be interested to see what sort of specifics come out of this meeting. I imagine when it comes to our relationship with China, we'll be looking particularly for measures on financial services cooperation. I think both sides, and in particular China, see that as one of the bright spots in the bilateral relationship. But obviously that's a different type of economic cooperation than Starmer might be discussing with Macron today.
Sorry to go on about it, but I just need to come back to the market turmoil. A word that I associate with your administration when you were in government was austerity. Is that going to be the only answer to calming the market?
Well, we've got austerity already. I mean, the real growth in public spending in the next spending round is going to be awful. And outside a few protected areas, you're getting considerable astringency in public spending. So we're already in the austerity world.
Is growth, how do we get growth? Is it by going back to the EU? Is it by turning attention towards China? Is it by doing a better deal with the United States? How does this growth appear?
There's no magic solution. I mean, that was the problem of the Truss moment, the idea that with one move we can be free. Of course you can't. We've had these four big shocks, right? The financial crisis, Brexit, Ukraine, COVID, done terrible damage to investment confidence, and Britain has been relatively badly affected by almost all of those. Europe certainly helps. I think Starmer's made a big mistake not going for the limited mobility scheme. It would have set the right framework for moving forward on Europe. But engagement with the outside world is a very important message to be sending.
It's a zero-sum game. It's not China or the United States. China
Absolutely
or
not.
Europe.
Absolutely not. We shouldn't be obsequious to either of them.
OK. In terms, just very quickly, there is a foreign influence registration scheme that the UK is considering at the moment, and there's the possibility of China being put in the top tier, i.e. you have to make very detailed representation to the government in terms of the influence that China is having through business. Do you think Reeves is right to push back on that and China being pushed into that bracket?
Well, there is obviously Secret Service advice I'm not party to, and I'm not in a position to make a technical judgment about that. I mean, clearly with the Chinese, there are threats and there are opportunities. And, there are threats in the cybersecurity area. If we have warnings from the security services that we need to take strong action, of course we should take them. But my amateur impression from outside government is that it doesn't merit treating China on the same basis as Russia. Russia is a direct threat, China an indirect threat, potentially with an upside as well.
Let's see if Trump sees it that way. It's a delicate diplomatic balance. Vince Cable, former UK Business Secretary, Ruby Osman, China lead at the Tony Blair Institute for Global Change. Lovely to have you with us both this morning as we follow Reeves and Bailey's trip to Beijing over the weekend. But coming up here on the opening trade, your stocks to watch, including Airbus, which says it expects to return to pre-pandemic delivery levels in the foreseeable future. That's with Joe Easton next. This is Bloomberg.
Ten minutes to the open, the equity market open here in Europe. 10 minutes as well until Gilt start trading. Let's talk about what the story looks like, because of course it's also payroll day in America. That's going to be a very big number coming up a little bit later on. How's the market set up? Let's find out. Paul Dobson, Bloomberg Executive Editor for Asia Markets, joining us now. Paul, give us the kind of symmetry around this number. The survey's in the kind of 160, the whisper number's in the 180. Bloomberg Economics has got it way higher than that. If you get an upside surprise, how do markets react?
Yeah, good morning, Guy. I think if you get an upside surprise, markets would be pretty upset because, as we've already seen this year, the market is worried about the Fed keeping interest rates higher now for longer, ceasing those cuts, maybe even needing to raise interest rates again towards the second half of the year if inflation isn't brought under control and if the labour market continues to perform strongly along with the rest of the US economy. So the consensus number among analysts, 165, but with that whisper number 20K higher there or thereabouts, it sort of says to me, you know, if we get a number that's in line with consensus, and the market will take that as a relative relief that it's not stronger, that it doesn't cause more volatility in the bond market, and therefore we may get a bond rally, a little bit of a weaker dollar, and that could take some of the recent pressure we've seen out of markets. If we get that 185 number or even higher, then potentially we see another sell-off, we see another lurch in yields towards that 5% number we've been getting closer to recently. It raises more concerns that the US economy, the super strength of the US economy just keeps on going. That lifts up the dollar and puts a lot of pressure again on global markets all around the rest of the world.
Paul, if we get to 5% on the U.S. 10-year, does that incentivize buying? Are there certain levels now on the way to 10% to 5% that, again, just basically bring in flows into the bond market?
I think that that's a really key thing. Some of the investors that we've been speaking to this week, Kriti, have been talking about 5% looking very attractive. And we've obviously seen a lot more demand in the corporate space for those higher yields that you can get on those bonds. I think part of that is the idea that actually corporates have such strong balance sheets at the moment. They're relatively attractive compared with governments because of the welter of supply that we're getting through on the government side and those inflation risks as well. You know, we've seen it particularly in the gilt market, but also we're seeing it even in something as safe as the US Treasury market.
And Paul, China seems to have all the opposite problems to everywhere else. The PBOC halting bond buying to defend the yuan as the gloom worsens. Does it matter?
Yeah, Lizzy, absolutely true. So China is in that kind of disinflationary spiral we've been talking about this week, a real funk, and bond yields just continue to press lower as a result. People cramping in there because they don't think that inflation is going to roar back in China anytime soon. They think that the PBOC is going to have to continue to cut interest rates, and they think that therefore bonds are a better store of value than trying to think about putting your money in equities, for example, or in property or something like that. Therefore, the PBOC didn't really need to be buying bonds in the first place. It hasn't been adding a significant amount in any case, and so their lack of buying now really isn't going to make a great difference.
All right, Paul Dobson, Bloomberg Executive Editor for Asia Markets, walking us through that bond market frenzy. We thank you so much. Let's go from the macro to the micro and our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So we're watching Ubisoft in Paris today after the game maker downgraded its sales guidance once again following another delay for its popular Assassin's Creed game. And we did see the ADR on that stock dropping almost 5% in the US. The company is reviewing options, including a takeover. Then in terms of Sainsbury's, looking a little bit soft on the profit guidance. Some of that is due to the increase in staffing costs following the changes announced in the budget. So this one does look a little bit disappointing and actually comes off the back of the firm underperforming the big rival Tesco and also that big drop that we saw in the retail stocks here in the UK following those worries about potential increases in tax and yields as well. Then over in aerospace, we got Airbus confirming its final orders for the year, the December orders, meaning that they have pretty much hit their target for the full year in terms of deliveries. But that might disappoint some people looking for a bit of a boost on those numbers for that stock. Then in terms of ratings, keep an eye on Persimmon here in London. That gets an upgrade over at UBS. We've also got Reckitt Benckiser here in London, could get some upside following Morgan Stanley's upgrade. And Eon over in utilities is cut today at Bank of America, could be weaker in Germany this morning.
All right, Joe Easton there with our equities report in terms of the stocks to watch that we are watching. We are about 5 minutes away from the opening trades across Europe. When you look at the futures picture, the context is really important because, of course, U.S. markets were closed yesterday, and yet Europe actually ended the day higher across the board, including right here in the UK. Futures are now actually tilted down, but not by a massive margin. Eurostoxx 50 futures down about 1/10 of 1%. The FTSE 100 down about 1/10 of 1% as well. The CAC 40 continues to be the underperform, but again, not by much of a margin. We'll see if the micro moves the macro a little bit more. We are also 5 minutes away from the UK gilt market open. We're going to bring you live pricing there and see if some of that market sell-off continues into the weekend. It's the opening trade next. This is Bloomberg.
Friday, the 10th, big day. Payroll's coming up a little bit later on in the United States. We've got the gilt market open in a few minutes' time. Sterling's already a little bit soft. So we're waiting for all of that still to come through. The US was closed yesterday, which kind of muddies the waters a little bit when it comes to pricing the get-go of trade here in Europe this morning. But Lizzy, what are you seeing when it comes to the futures picture?
Well, Guy, Eurostoxx 50 futures are pointing lower. What's interesting is that the FTSE 100 seem to have sailed through this market turmoil quite unscathed, but actually those futures had been pointing lower than the rest of Europe, but not anymore. The CAC aren't even lower because perhaps of all of the geopolitical uncertainty, this theme that has been carrying on. But perhaps this morning, Kriti, we need to focus on the individual stocks at the open.
Certainly, and you ended on that French story as well. Now, there's always underperformance in the French market given that geopolitical risk, but today there are two French stocks you really want to keep an eye on. And we're going to kick it off with Ubisoft here, and this is kind of close to my heart. I love the video game beat, a little bit of nerd in me in terms of my first stock beat, but this is important because it looks like they are talking to advisors about delaying a key game that could weigh on the stock this morning. Airbus is another French stock you want to keep an eye on. They have the opposite story, saying that the return to that pre-COVID delivery highs is just within reach. Does the market agree with that take? And then, of course, Sainsbury's is the other one that we're going to keep an eye on in the context of the outperformance of the UK session yesterday. Their grocery sales lifted by a pretty strong Christmas, but they are saying that that cost inflation warning could weigh on the entire outlook. So some kind of crosswinds, mixed picture when it comes to Sainsbury's. Guy, we will see how that, of course, trades at the opening.
And that's the problem the Bank of England's got right now. Are we going to see inflation coming through from retailers like Sainsbury's as they push up wages to deal with the NIC story? OK, here we go. The bond market's about to open in the UK. Equity markets are about to open across Europe. Let's get an idea of what is happening. Remember, there's a mechanical process around the FTSE 100. As sterling gets hit, that's positive for the translated revenues coming through for these big international companies. Take a look at the 250 to get a better gauge of the UK story. But the Stock 600 absolutely flat right now. The FTSE 100 actually relatively flat as well. No big under or outperformance coming through between these two markets. The CAC 40 could be of interest this morning. We are watching as well what is happening with politics in France quite carefully at the moment, but there's a whole load of single stock stories that are also worth paying attention to there as well. We're waiting for payrolls a little bit later on. We didn't have trade in the US yesterday, so that makes things a little bit more complicated in terms of the trading narrative coming through today. But we're waiting for the US to come back. We're waiting for that payroll number today. We're also waiting for CPI next week. What does the sector story look like, Kriti?
Well, right off the bat, you are looking at commodities really front and center in terms of driving this trade. We're talking about the outperformance here. Basic resources seems to be driving the FTSE 100 outperformers, at least, although you are seeing that broader underperformance in the FTSE 100 today. Rio Tinto, Anglo-American, Glencore are some of the biggest index contributors to the upside there. But again, it is a commodity story to the downside as well. I'm seeing Shell as one of the biggest weights on not just the FTSE 100, but the stock 600 as well. It's almost a tale of two commodity stories, but then you've got a little bit of various sectors. Airbus driving the trade, Roche driving the trade as well. We're going to dive into details in just a moment, Lizzy.
Interesting, Guy. You made the distinction between the FTSE 100 and the 250, the 250 being more domestically focused and actually seeing an ever so slight recovery this morning, outperforming the FTSE 100. And perhaps that's just a bounce back from the misery of yesterday's session. You have seen the pound paring some of its earlier losses. It's down only 0.2% now at $1.2022. But if you look at some of those individual movers there, you've got Airbus at the top of the board up 1.6%. Zurich at the bottom there down 0.6%. Broadly, it's about half of sectors in negative territory just over this morning, Guy.
We'll talk about Airbus and what is happening there. Christian shared a briefing yesterday from the company. We'll get Benedict Campbell's take on that out of Berlin very, very shortly. Let's talk a little bit about what is happening with the gilt market open this morning. I'm looking at yields moving higher, but not out of whack with what we're seeing across the rest of Europe. So the Bund is up by 1.5. You got the gilt up by 1.6. I don't think there's a particularly big divergence there. Let me just switch my board over to what is happening with the 30 years. And again, like the UK, in some ways, the rise we're seeing this morning in terms of yields doesn't look that dramatic. We're up by, 1.5. Italy's up by 2.4, Germany's up by 2.1. So it looks like we're kind of broadly within the parameters of what we're seeing across the wider European story this morning, Kriti.
Yeah, certainly something we're going to keep an eye on in terms of course, the fallout and what those kind of correlations actually look like. Let's get a perfect expert analysis here this morning. Joining us is Wolf Van Rotberg, equity strategist over at J. Safra Saracen. Wolf, a pleasure to have you on this program. Let's start there. We're trying to figure out the kind of cross correlations here between the gilt story, the currency story, and what the read-through might be into the equity story, not just in the UK, but in the broader stock 600. Your take?
Well, I mean, on the UK itself, it's a pretty clear story, I think. I mean, what we're seeing in the gilt market and in the FX market is more of a risk-off in a general sense. I mean, obviously, if you see a move higher in yields and a move lower in the currency, it's quite telling that the market is trying to pull back from these two segments. But on the FTSE, it's obviously quite a supportive factor, and that's what we've known for quite a while. I mean, the FTSE 100 is inversely correlated to the currency. It's a very international market, 70% or more of revenues coming from outside the UK, barely a footprint of, kind of very small cost footprint in the UK. So you kind of have a hedge trade against a weakness in sterling. And I think that's the reason it's benefiting to the extent it does right now, in addition to the energy component, which has definitely helped with the oil price moving higher over the past few weeks. On the European market, I think on the wider European market, the impact is not as much felt right now, because it doesn't have much of a bearing, let's say, for European equities outside the UK. We are fairly, positive, let's say, on the market outside the UK, in Europe, Euro area, also on the Swiss market to some extent, mostly because we think there's some kind of gap to be closed on the valuation side. And on the macro front, obviously, the data has been very weak in Europe over the past few months, but we think there may be a bit of a bottom here in terms of growth numbers. And in particular, going into 25, we have the election in Germany in February. What we could see is a bit more of a fiscal stimulus coming out of Germany, obviously, maybe offset by some tightening in France. But at the end of the day, we may see a better year for European growth than what's currently being anticipated and what's currently priced.
Well, when you bring in the currency picture to it, we saw weakness in the gilt market, as I said, weakness in the currency market. Does this at some point, if that weakness continues, incentivize flows into the equity market? What kind of levels are we looking at to really say UK and Europe are too cheap not to own?
Well, I think we are already at these levels. So we've obviously seen the euro area in particular starting to perform over the past few weeks. I mean, part of the reason has been, kind of, let's say, fundamentally, it's probably the valuation side. But then the overlay from the currency side with the dollar strengthening, this has definitely helped the euro area. And I would think that this can continue for some time. We are more cautious on the US market, where we see basically that valuations are touching the highs they've done in 21. And the macro mechanics, let's say, is changing to some extent, which is becoming a lot less favorable for US equities in particular, with inflation being back, coming back, and kind of disinflationary period, which we've had in 24, with inflation coming down, basically troughing in October, against the backdrop, which is fairly solid still on the growth side. This is ending, and inflation is becoming more of a driver of rates, and for that reason, a negative for equities, or a headwind, let's say, for the parts of the market which are particularly expensive.
So where you say you're more negative than consensus for US equities, but you're kind of positive about European equities, to be clear, is it that you're inherently positive about Europe, or just that it looks good compared to your view on the US?
At the end of the day, we would still expect upside by the end of the year in both markets, in the US and in Europe. But the European, positiveness, let's say, which we are trying to communicate, is more of a tactical trade. It's really, where we're sitting right now. We see on the valuation side, it doesn't make a whole lot of sense as compared to the US, and where we are in the cycle right now, with the potential catalysts, as I just mentioned, on the fiscal side out of Germany, helping the market to recover to some extent. So we would think that this is more like a 2, 3, 4 month position, whereas the fundamentals in the US are still quite a lot stronger in terms of like the long-term growth picture for earnings, structural growth margins, and so forth. Obviously, the US market is much healthier in that regard.
But why have you gone off US banks when aren't they likely to benefit from Trump's policies? We've already seen Michael Barr leaving before Trump's even landed. Surely that's going to be a help to the banks on capital buffers.
Yeah, certainly. And I think the banks obviously are, one sector which should benefit also from the current, let's say, gyrations in the rates market. They've seen the kind of curve they're trading on flattening a little bit into September, October. It started to steepen again, which may help in addition to the regulatory tailwinds they will likely receive in 2025. But then must also be said, the larger banks are already priced quite rich, I would say, in the US in particular. So it's more of a neutral, let's say, for the banking sector right now, I think, than what it was, let's say, at the beginning and the first half of 2024.
Wolf, what's the beta of European stocks to US stocks? If US stocks go down by 10%, do European stocks go down by 15% or 5%?
I would think the beta is probably below 1 right now. If we, think about a scenario which looks similar to 2022, must really be said, if it's basically coming from the valuation side, with rates pushing to a level such that the market capitulates and says, like, okay, these valuations in the US, 22 times 12-month forward earnings are just too high, without really pricing much of a recession. Obviously, if it came from the macro data side, saying, okay, growth rolls over, which we don't expect right now, and I think the recent data is clearly pointing into a different direction, then the European market would have a beta above 1. But if it's an, let's say, valuation adjustment move lower, then the US is clearly more exposed here.
Yeah, that nuance is interesting. 5%. How do you think equities react to 5% in the US? Is that a key line in the sand? If we go north of 5%, do we get a much bigger reaction? People are talking about this as being a kind of near-term possibility. How do you think risk assets are going to respond if yields continue to climb?
Yeah, I think the kind of 5% is a good number, I think, in a sense, because that would be pretty close to cuts being priced out. We have a pretty decent correlation between the 10-year nominal yield in the US and the 3-year Fed funds future. We still have something, I think, 40, 50 basis points cuts being priced in. So we would end up at close to 5%, assuming that all the cuts over the coming 3 years are being priced out. On our analysis, that would probably translate into something between 5 and 10% reduction on the PE, meaning, that would pretty equally translate into performance levels. So we would think 5%. I don't think it's a kind of cliff effect there. It's more linear in a way, but that could mean something like 5 to 10% downside on the market in the US.
Okay. It's an interesting correlation. Wolf, thanks very much indeed for joining us this Friday. Greatly appreciate it. Wolf von Wolfberg, equity strategist at J. Sanford Saracen, joining us out of Zurich. Let's take a look at the core 6, see what's happening there. This is the picture at the centre of gravity here in Europe. As you can see, there's still quite a lot of red on the screen this morning. LVMH, ASML, Schneider, Nestle, all soft, but Novo and Ferrari both posting a few gains. Let's talk about what else we're watching this morning. Joe Easton, of course, has all the details.
So we have got a big drop in Ubisoft over in Paris today, Guy. The company downgrading its sales guidance once again as it delays that Assassin's Creed game that everyone is waiting for. Not a good day for the game as that stock slammed this morning, down almost 10% at the moment. Bear in mind, it was already down around 50% on a one-year basis heading into that report. Then, in terms of Airbus, that one looking a bit more positive over on the same market in Paris. We did get the December order numbers, and it looks like they are going to match their total full-year orders, according to the take from the Bloomberg intelligence analyst. They're calling it a positive update from Airbus this morning. Then here in the UK, we've got Sainsbury's looking a little bit weak following their comments around the increase in wages that we're going to see because of the changes in the budget and also the increase in national insurance. The profit guidance looking a bit light from where it was in terms of analyst expectations. That one coming down very slightly. Not been a good week for the UK retailers at all following the updates yesterday. Then in medical tech, take a look at Ambu over in Denmark, up around 15%, a massive jump for that one. That's a medical tech firm listed in Copenhagen, and it really has been on a bad run recently, so coming back up quite significantly for that company today. In the data and AI space, we've got a company called Data Group that's saying they're no longer going to spin off one of their big units. That was one of their inter-business AI units that they say they're no longer going to spin off for that firm, and therefore that one catching our radar at the last minute, and it's coming down 5% this morning over in Germany for that one. Then in terms of rating changes, Persimmon, as we mentioned earlier, that one was edging higher at the open of trading here in London. We're up 1% almost for Persimmon. UBS saying a 30% sell-off in the home builders in the past few months is too much, and they reckon there's a good chance to buy into Persimmon. That one coming up today. And finally, we mentioned earlier, Elon downgraded over at Bank of America. They've had a negative court ruling on their grid business, and Bank of America reckons that's going to hit their bottom line. So Elon falling 3%, underperforming in the European utilities market this morning.
All right, Joe Easton from our equities team, we thank you for that update. Airbus shares, as you say, up 1.6%, and that's a story we're going to dive more deeply into next. They're hopeful of a return to pre-pandemic delivery levels, and they say it could be within reach. So we'll discuss that next. This is Bloomberg.
Welcome back to the opening trade. We are 17 minutes into the opening trade here in Europe. Not a great deal to write home about when it comes to the headline numbers being posted by European indices this morning. But below the surface, there are some interesting narratives that are worth paying attention to. Airbus is certainly one of them. The European playmaker expecting to return to pre-pandemic delivery levels in the, quote, foreseeable future. This according to Christian Scherer. The world's biggest playmaker delivered 766 jets in 24, just shy of its targets. In terms of what the narrative, though, is, it is sounding much more positive. Remember, this is a company that has been beset by supply chain issues over the last few years, and the narrative certainly seems to be signalling an improvement on that front. Not everybody's completely convinced. We've been speaking to Avalon here at Bloomberg. They think that actually Airbus's issues may persist. But Airbus, in some ways, hasn't been able to take advantage of the problems that its biggest adversary, Boeing, has been experiencing because of the supply chain issues. They're still talking about the fact that there's a knowledge gap within the industry. Yeah. But if they can resolve some of this and deliver on the ramp, particularly on the 320 lines, then that will be a huge positive.
So the Boeing recovery story has been known to be taking years in terms of timeline. Does Airbus have a shorter recovery story in terms of addressing the supply chain issues?
Well, I think that it's lasted much longer than anticipated. Yeah. So the point that Airbus is highlighting at the moment is that it is starting to see progress being made. It's still flagging that there's a longer-term issue with the fact that a lot of people left the industry during the pandemic and never came back. So there's this huge kind of skills shortage So there's a labour shortage basically within the industry that they're really struggling with right now. That feels more resolvable than the long-term problems that Boeing has had. So Boeing's problems clearly are more intractable and more difficult to deal with. Airbus's issues have not been small, though. It's had also issues with engine suppliers. Pratt & Whitney, particularly on the 320s, has been hugely problematic. So they are resolving some of these issues. But if they can gain any kind of attraction, the operational kind of gearing effect through their supply chain into Airbus, into its customers, could be enormous.
But this kind of comes back to our conversation with Vince and Ruby, because it's also a geopolitical issue, right? So, you know, the trade tensions since the first Trump administration have helped Airbus get the upper hand over Boeing. Then you've got China trying to make its own planes, Xi Jinping trying to make its own homegrown aircraft. So, you know, how do things change over this next administration as the alliances change and tariffs impact?
So Airbus, to a certain extent, when it comes to the US, does have a tariff issue. But it does also have an assembly plant in Alabama. So it is going to be partially manufacturing in the United States. Now, that was an issue last time round. Whether that remains a big issue this time round will remain to be seen. I think if Boeing was charging and on the front foot, I think maybe Trump would take a different line on this. But it'll be interesting to see how he manages that story on the tariffs.
Is this something, I mean, when we talk about Boeing, we talk about them in the context of too big to fail, national security, just given just how big they are to the U.S. economy as well. This is something you're going to see from COMAC as well, arguably from China. Does Airbus have that same oomph in France?
Airbus is a huge employer in France. It's a huge employer across Europe. Daza, Casa, all these companies.
But is that a lever they can pull?
In terms of...
like trade negotiations with the States, if that were to come, is that something that could be talking, especially if Airbus is building out that manufacturing ability in the States? I
think it probably just insulates. I think it probably takes it off the table more. I don't think it's a negotiating issue. I think Trump would like to see Boeing... I think the US would like to see Boeing back on the front foot. How that gets done, like Kelly Ortberg's got numbers coming up at the end of this month. We'll get an update from him at that point as to how long he thinks this is going to be. This is the new CEO of Boeing coming in. But I think the problems that Boeing are going to have is going to be quite long-lasting. I'm not sure that it's going to... I think the hope would be at Airbus that this is not a major issue, that this is not part of the narrative, that actually the geographical footprint, the footprint in both areas probably maybe alleviate some of that issue. And you've got to remember as well that Airbus manufacture's got a final assembly line in China too. So in many ways it's hedged kind of geographically across the world on this issue.
So I want to come back to Airbus, but I want to stay with the trade theme and switch to tech, because Nvidia has criticised these new export restrictions that are expected to be announced soon. And they were first, of course, reported by Bloomberg yesterday, the company accusing the Biden White House of trying to undercut the incoming Trump administration by imposing these 11th-hour rules. Bloomberg anchor Tom Mackenzie's hot-footed it over from the radio studio to break it down. Tom, why is Nvidia just so concerned here?
Well, one of the narratives and one of the themes, one of the pieces that we've understood around Nvidia this week is that this is a company increasingly want to push into other segments of the ecosystem around technology and increasingly globally as well. But what that does, as they try to future-proof the growth for Nvidia beyond data centres, is put them at a more exposed position when it comes to tariffs and restrictions that are coming through now from the Biden administration. So tariffs comes later, because that's what Trump has got in his pocket. But when it comes to these restrictions that we got yesterday, 3 different tiers, the most important being the second tier. First tier is allies, third tier is adversaries, China and Russia. The second tier is the global picture, making it more difficult, putting in place limits and caps on countries that have access to AI, so they'll have a certain number of GPUs or chips that they can actually buy in, and they'll have to get accreditation if they want to get more. That is where the focus of concern is from Nvidia. And the language is pretty remarkable from the company. I'll read some of it. They call the rules extreme, as you said, nothing to promote the national security of the US, but rather to push the world to alternative technologies. And they interestingly say that the Biden administration policy would be a legacy that would be criticised by US industry and the global community. They should not, and I'm quoting from Nvidia, the Biden administration should not preempt Trump. And we heard from Jensen Huang, he wants to have that meeting. He told Ed Ludlow with Trump at Mar-a-Lago. He's open to working with them. Very different in terms of the optics around how tech entrepreneurs are speaking about the current administration versus, of course, the incoming administration.
A complete change in the national security priorities and the regulation story as well. But hasn't Nvidia been here before with every level of export restrictions? And the previous roadmap has been you build one chip for the States, you build another chip for China, Why does that not work this time?
This is much more broad-based, and China has been able to source Nvidia's chips through third parties. This second tier of countries that are not necessarily adversaries or allies, that is targeted at trying to ensure that China and Russia cannot get these chips through third parties. It's the broad-based nature of these proposals that could come as soon as Friday that I think is causing the most anxiety. Again, for an Nvidia and for an executive team led by Jensen Huang that wants to push sovereign AI. How do you push sovereign AI to a country like South Africa that sits in that second tier if they're going to have a certain cap and a certain limit on the number of GPUs? It just makes that mission that much more difficult, and some would support the case from Nvidia that maybe this is going to push their rivals to look at alternatives. Maybe it makes the prospects of some Chinese GPUs and AI accelerators, although a long way behind Nvidia, a little bit more attractive for some sitting in that second tier.
So is Nvidia's issue here, when we look at the map, 3 categories,
yeah.
Is Nvidia's issue here the fact that it can't export to China and the red areas, the pink areas, or is Nvidia's issue here that it can't and is going to be restricted in exporting to the yellow areas? Is that the bigger problem that it now faces?
To be clear, they have not articulated specifically what that concern is. But I think you can make the assumption that it's less about getting GPUs into China, given, as Kriti was pointing out, that door was closed a long time ago in terms of the most innovative chips. They're still supplying some chips, the legacy ones, to China. It is, I think, to your point, about that second tier set of countries around where the concern is, because now those countries are going to face that bureaucratic set of measures that they're going to have to get through, the measures they're going to have to meet. Companies will be able to bring in more GPUs above the sovereign set limit, but they will have to abide by US security requirements and human rights requirements. And I think that's where the concern lies for Nvidia and the team.
Tom, just take us through the TSMC result. A sales beat. Is that a tailwind for Nvidia?
TSMC manufactures Nvidia's chips. They manufacture Apple's chips as well. So those two stories are very much interlinked. What we're having a reminder of is that the buy and the spend around data centers is not going away, at least in 2025. Hon Hai or Foxconn came out with results that beat. Today, TSMC, to your point, came out with sales that beat. They're looking at a margin, according to Bloomberg Intelligence, of around 58%. It's not about manufacturing iPhones for Apple, although that is still a significant part of TSMC's revenue stream. It is about the data centers, and that demand continues. But it wasn't as high as some of the highest estimates. And if you're a bear out there, then you're asking, is there an overbuild of data centers? Is there a lack of energy? And where is that killer AI app? January the 16th, they will have that earnings call. They will be scrutinized on the CapEx spend. That's going to be crucial for TSMC. How much are they actually putting into the ground to spend to deliver some of this going forward?
It's going to be a fascinating story as well, and just how much kind of cash that they have on their balance sheet actually kind of cushions them from some of this geopolitical chaos that they do have to navigate. Bloomberg anchor Tom McKenzie walking us through the dynamics in the chip space as well. Coming up, we're going to switch gears a little bit. We're going to discuss the business outlook for France under the Bayrou government with Fabrice Lissachet, Vice President of Medef, the country's largest business lobby group. Coming up next, this is Bloomberg. This is the opening trade. We're about 30 minutes into today's session, seeing some marginal moves on both sides here. Remember, we did open lower across the board, so pairing some of the marginal loss that we've seen, marginal gains over in the DAX and, of course, the French index as well. But the stocks Europe net is ultimately flat, as is the FTSE 100. We are getting some headlines here coming out of Mercedes. They're talking about their global deliveries for the fourth quarter being up 1% year over year. The fourth quarter Europe car sales, however, are down 5% year over year. When you look at the stock, you are seeing, again, pairing a little bit of the losses, but still down overall, Guy, about 0.6%.
Let's talk about what has been going on in Germany. We'll do German politics, then we maybe need to talk about French politics. But let's start in Germany. The US tech billionaire Elon Musk has waded into Germany's election with a conversation with far-right candidate Alice Weidel on his social media platform. Some would argue it amounted to an unpaid advertisement for the AfD. Let's bring in Bloomberg's Ollie Crook with the details. Ollie, they spoke for more than an hour. What did they talk about?
Yeah, so listen, Guy, we often sort of use the term wide-ranging conversation to, discuss sort of long-form kind of podcast conversations. I think it's truly appropriate in this case. They sort of talked about everything from sort of energy policy to Angela Merkel to excessive bureaucracy within the German economy, other issues within the German economy, immigration, of course, the war in Ukraine. Israel, there was a good portion of time dedicated to the subject of Adolf Hitler, as well as the sort of issues around colonizing Mars and whether or not either of the two believed in God. So this was really a very truly wide-ranging conversation. I think I was a little bit surprised by the number of listeners because you could track this throughout the entire conversation. It started at about 175,000. Then it kind of really dropped off when they started talking about the energy sort of story within Germany to about 100,000, then came right back up to about 200,000 when they were talking about sort of immigration and then those sorts of things. I think that it is also worth mentioning that there were a number of things that were discussed there that were just blatantly false. Elon Musk saying that she was the leading candidate to lead Germany. Of course, as we know, the AfD is the #2 candidate with 20% of the vote. The CDU is, in fact, leading with about 32% of the vote. And, of course, none of the other parties would ever enter into coalition with the AfD, so sort of bringing additional skepticism to that statement. In addition to the fact that they were both sort of agreeing and talking about how Hitler as a figure was actually a far-left leader, not a far-right leader, that basically he had been cast poorly in history. That is what Alice Weidel was trying to say, and also saying other things like, the Jews are not sort of free and to walk on the streets of Germany right now because they're under such threat from Islam. Again, these things are just blatantly untrue. What was interesting is the way in which the conversation was sort of set up. It was set up for both of them to sort of set up alley-oops and kind of slam dunk on issues that they knew they were going to agree upon. But really, Elon Musk's ambition was to sort of make her seem like a very, very sort of reasonable person on a number of different issues, and basically saying that, she was, and reiterating his support for the AfD, saying that they were the only sort of logical path forward in German politics.
Yeah, so giving her a platform for these views. As you say, Ollie, interesting that there were hundreds of thousands of viewers compared to, I'm just looking at it now, 211.9 million followers for Elon Musk. So kind of paling in comparison to that number. But I wonder, does it actually move the dial for German voters?
So listen, I think that there are a couple of things that I think are worth paying attention to. The regulators in Germany, the regulators in the EU were paying close attention to this to see basically if there was any undue influence that this might project into the question of the German politics. As far as how far it sort of changes the dial in Germany, I am skeptical that we'll do a huge amount. I think most of the people in Germany are sort of well apprised of the AfD's platform. Of course, polls can shift, but I don't think for anybody this is sort of new information. It was clearly designed, A, it was held in English, but B, it was also designed in the way that he set up the conversation to say, hey, basically for the global audience, for those of you who had not heard of the AfD, what do you want to know? What do you want them to know about you? I think what is also sort of interesting is that, this won't be a Rogan-level event, I don't think, in terms of like podcasts and really changing opinion. But again, what it also doesn't touch is there's sort of the differences in the sort of within the AfD party. There's the Alice Weidel, who's really sort of running on the economic platform of sort of libertarianism. But this is a party that is really very fragmented. 3 chapters of it are basically designated extremist groups by the German government. There have been politicians that have been expelled for making statements that are sort of sympathetic to Third Reich era sort of opinions and fined for that sort of thing. And again, these are things that basically you don't ever really need to confront as the AfD, because right now you can just sort of sit at the sidelines of German politics, bash the establishment, but there are some real divisions within this party that will have to come to the fore as this party potentially rises in prominence in Germany.
Ollie, great stuff. Thanks for updating us on what feels like an event that is relevant to Germany, but relevant to the wider European story as well. You see what is happening in the UK and the impact that Elon Musk is having on UK politics right now, the impact he's having on Keir Starmer and the issues that are surrounding him right now. It's not just related to what is happening in Germany. Let's pivot to France, talk about what is happening there as well. The French socialist leader, Olivier Faure, says that the budget talks between the left-wing parties are moving ahead. This as Prime Minister François Bayrou fights to get his 2025 budget over the line. For more on France and the sentiments of the private sector on all of this, we're joined by Fabrice Lesachet, Vice President of Medef, France's largest business lobby group. Good morning.
Good morning.
Nice to see you in London.
Thank you. Great to be here.
What's going on? What is your perception of kind of this process and as it unfolds? And is business seeing the developments that it wants to see right now? What is your perception?
Look, we need stability, but stability not at all costs, not on the expense of companies. So if the price of stability is to come back on the pension reform, that's a no. We can, of course, dialogue. We can find some solutions on the technical topics, but we need to work more. We have a productivity gap between Europe, US, China. In France, especially, we need to fix that. We need to work more.
So what are your red lines? What do you think shouldn't be on the table here?
The red line is to choose to come back on the pension reform and to increase tax. We need to cut spending. And everything that we hear now that is shaped in the public debate is increasing tax, having super tax on corporations, having tax on household, on airlines, etc. And this is not the good way, because the problem that leads us to that point is an excess of public spending. I recall your audience that France is spending 57% on GDP public spending. Now the debt is 12%. It's enormous. And the cost of this debt it could go up to 70 billion a year. So it's all this money that we need for something else, to invest in the future, in innovation. We don't have the luxury to burn our money just to pay high interest rate because we don't do the job of reforming the countries. So now the Business Confederation in France, Medef, said that we need to reset. It's a word that your Prime Minister uses a lot with Europe, reset. But in France, it's an opportunity to reset how we finance the welfare state. We cannot continue like this, to have lots of tax on work and production. We need to switch to consumption. Maybe we need to have pension fund, capitalization, titrisation. These are the tools that are needed, that other countries have, that yield many good aspects for the people, and we need to implement that. So we'll push that very strongly.
I get that impression.
You say that there's no excess money in terms of refinancing and to kind of to address these interest rates. But I'm curious where, outside of the kind of local domestic story, where French business sees the bigger threat from the ripple effect from Donald Trump, from the U.S. steel tariffs, et cetera, coming westward, or the eastward tensions from China onto French luxury, onto French exports.
It's both. For now, the US is just a promise of increasing tariff, which has already some effects, because some people are trying to maybe locate investment in the US to anticipate these tariffs. So we see that US is a strong country to attract now industrial investment. It was already with Biden and the IRA. But with the overcapacity of China, it's not only France, it's all Europe. It's not only Europe, it's the other BRICS.
Yeah.
Brazil could be afraid of China. Egypt could be afraid, because who can cope with a country that was producing 5% of the world global industrial production in 2000 and will be nearly half in 2030? Who can cope with that? Nobody. So we need, and you know that the WTO is dysfunctioning, because we cannot nominate the judge to settle the dispute, and we cannot have resolution. So we need to find a way in this world, and this is why Europe and France is supporting that, took the stance of anti-dumping also, regulation, and now you see the first results on EVs for chemical industry, because we have lots of difficulty in automotive, chemical industry, steel, and we have lots of production of over-regulation that is killing the bird in Europe. I don't know about UK, but I guess it's a tendency that we all have in Western countries. This is also what Musk is saying for the US, so it's not only Europe.
So tensions everywhere is really what I'm getting here. But I guess my question is, even in the best case scenario, if you do start to see some sort of plan coming out of the French government, some sort of compromise around the budget, et cetera, these yields come down, that still takes time to show up to some of the businesses that you represent. What is the short-term contingency plan? Is it more fundraising via debt issuance? Is it more equity issuance? Is it acquisitions? Is it spin-offs? What is the short-term contingency plan to address the $70 billion that you just mentioned?
So the short-term plan for us, it's first and foremost to have the announcement that the budget is taken. Why? Because we see that all investments are cut and companies are not recruiting people because they fear what will going on in France. So to have this budget will ease maybe the cost of borrowing money on the markets and ease the yield of the bonds, of the French bonds. So for us, the key is to have an agreement. And the path is very tricky because we need this stability, this agreement, without losing too much. And it's a trade-off, what we will lose in this process. We cannot accept that companies get lots of new tax. And so this is all what we are focused on, because all what you say are tools, equity, this or that. But the problem is not the tools. The problem is our situation. Since 30, 40 years, we don't do enough reforms. Public spending are just increasing. And it's not only France. It's the same in UK. It's the same in the US. Otherwise, you won't have a Musk saying it that he needs to cut the spending. You won't have Milei in Argentina for different reasons. So we are all more or less in the same situation. We need to reduce the place of the state in our societies and the public spending.
But what we're seeing in the UK as a result of the fiscal decisions, and we talked about this yesterday, was in the private sectors, companies are slowing down hiring decisions. Is that what you're hearing from your members as a result? Is that feeding through from the lower business confidence?
No, it's many things, because we have the Ukraine effect with the energy costs that is taking a hard stance on Europe. We have the demographic issue that is a hard stance on Europe, more than the US. We have, since 2 years, US was more at 2.5% growth, Europe nothing. So we are not able to create enough growth and opportunities. We see that 300 billion flies of savings from Europe to the US every year. So the capital market is much more dynamic, and it's very hard for us, again, to cope with the ecosystem of the US and with the power of China. And we need to find a way. You see this with the UK alone, the global Britain, where it took UK. Not so far, I think, for now, when you see the results. So we need to be together. That's why I think the reset from UK with the EU is also important, because we share. You go with the Brexit, but the channel stays where it is. And we need to find cooperation, because we have the same structure of economy, more or less, and we have the same issue. So you see UK try to sign some trade agreement with Switzerland on financial market, with another small countries, but it's very limited. So we have a lot of work to unite ourselves to offer a good answer to China and the US.
Well, I mean, Keir Starmer had dinner with Emmanuel Macron at Chequers last night. It seems like he's trying.
Yeah, it's certainly something we're going to be keeping a very, very close eye on in terms of that geopolitics and whether that moves the dial. Fabrice Lesage, Vice President of Medef, of course, joining us around the program. We should just bring you some headlines as we were speaking to Fabrice there. This time coming out of Japan, it has moved the market. You're looking at dollar-yen at a 157 handle. It did drop down to 158 at the BOJ, said it was weighing raising the inflation forecast on rice and yen and still mulling the rate decision for January, still carefully assessing the data ahead of that January meeting and upgrading their core inflation views for the full year of 24 and the full year of 25. This marks the second time of verbal intervention that we're seeing in this market.
Yes, rice costs. So rice costs are rising anyway.
Yeah.
Then you factor in a cheaper yen, and this is the problem that it has with the import around that issue, around the rice story. So it's just another factor that feeds into the mix about why the Bank of Japan may be looking to raise rates. How far will those go, I think, is the key question.
Yeah.
Like, is it just one more? Is it two more? Is it three more? And what effect will that have in terms of Japanese bond investors and how they see the story? Because it's, in some ways, you're getting a bigger yield pickup elsewhere around the world as well, which is another factor that folds back into Japan.
Yeah, interesting that private economists have higher inflation estimates than the BOJ itself. But, Kriti, as you say, the yen at 157 handle at the moment. Coming up on the programme, will President-elect Donald Trump come to TikTok's rescue? We'll discuss whether the app can avoid a ban in the US ahead of that Supreme Court hearing. So stay with us. This is Bloomberg.
Welcome back to the opening trade. We're about 48 minutes into today's session, seeing some marginal moves across Europe. We're now seeing, actually, the CAC 40, the French index, outperforming its peers. That is not how we started the session 48 minutes ago, and really pairing some of the losses that we saw in the futures trade as well. I should mention we are seeing the Spanish index, the IBEX 35, taking quite the beating here, down by 0.8%. We're going to dive into those details shortly and maybe give you a little bit of update. But what you need to know is perhaps pairing a little bit of the moves that we saw earlier this week. But there's a story that caught my eye that I think is really important in terms of the ripple effects for the tech sector globally, and that is around TikTok. The U.S. Supreme Court is due to hold a hearing whether TikTok should be banned over national security concerns. The app set to be shut down on January 19th, a day before Donald Trump is inaugurated to the Oval Office, unless, of course, its Chinese parent ByteDance sells it to an American owner. Let's talk about the likelihood of that story. We're joined now by Bloomberg Intelligence technology analyst Tamlin Basin. Tamlin, this has been going on for ages. This is something that was introduced under Donald Trump's first term. There's been some speculation of who this buyer could be if indeed that extension is granted. Amazon, Walmart, Microsoft. Or do any of these have a fair shot?
Well, so far, there's been no indication that ByteDance is even entertaining the idea of selling the app. And there's also further speculation that China wouldn't even let the algorithm go along with any sale. So at the moment, we're operating on the assumption that no extension is going to be granted for the sale, and then it's going to be either banned or the Supreme Court hearing, which takes place later today, that might be TikTok's last chance to really stave off this ban.
So then how likely is the Supreme Court to rule in TikTok's favor?
Yeah, well, so the best indication we have for how the Supreme Court is going to rule is the way that the D.C. Court of Appeals ruled in early December. And this is a court that's two-thirds conservative, so the same ideological makeup as the U.S. Supreme Court. And it was a unanimous and sweeping loss for TikTok. And there's nothing that we've seen in the briefing leading up to this case that would really give us a lot of faith that there are 5 Supreme Court justices are really going to find enough there to overturn that decision. So as of now, we think TikTok definitely is the underdog going into this hearing today.
And then Trump steps into the frame. What happens when he does?
Well, there's not a whole lot that he can do at this point. And the reason for that is just the stage we were at in the saga. This has been going on for years and years. This was a overwhelmingly bipartisan bill that was passed by Congress, signed into law by President Biden, and it takes effect the day before President-elect Trump takes office. There's really not a lot that he can do at this point. That can really prevent this from taking effect. The best chances are really the Supreme Court saying that we're going to sort of not let this January 19th deadline take effect, and we'll pause that. But they have not done so yet.
Let's bring it back to the ripple effects here. TikTok is a major customer of Oracle.
Yeah.
It is on the app stores of Apple and Google. It represents content creators, and this has turned into a First Amendment constitutional crisis, basically, for a lot of people who actually make their living off TikTok. Walk us through the ripple effects here into the tech sector, and specifically the Mag 7.
Yeah, absolutely. And on the First Amendment issue, that is where we think TikTok might have its best argument at the Supreme Court. But on the ripple effects, obviously this is an existential issue for TikTok, at least with respect to its operations in the U.S. If it is removed from the U.S., and that does create a potential opportunity for others in the social media market. So you have Meta, Snapchat, probably X, could see a lot of potential for gains, because if it's removed from the U.S., that's a lot of people who are spending a lot of time on that app, and those eyeballs are going to go somewhere else.
What happens in Europe if TikTok is banned in the States?
Well, Europe has its own rules, its own laws. It is regulating the tech sector with.
So TikTok can still exist?
It can, yeah.
If it's banned in the States?
Absolutely.
So basically we just end up with a European version of it, because it doesn't really exist. This would be the centre of gravity, you could argue.
I think it would be. And Europe is is regulating TikTok, but it so far has not moved forward any sort of ban mechanism.
But if it's still in Europe, how does it get the updates that you need from the app stores that are still American?
Well, the app stores already operate differently, and a lot of this is due a lot to a lot of the regulations that Europe has moved forward.
So it's not to come to the same
precisely.
restrictions.
Yeah, exactly.
All right. Tamlin Basin, Bloomberg Intelligence technology analyst, joining us around the table. Let's go to one of the major data points that we are going to be watching today, the first U.S. employment report of the year, out at about 1:30 p.m. UK time. Let's get a sense of what to expect with Bloomberg's Valerie Teitel. All right, Val, there's some pretty strong estimates around this one.
Yeah, especially from Bloomberg's Anna Wong, our own economist, calling for a blowout jobs print. Her estimate is 100K above the consensus estimate at 268. She's citing the high-frequency data that we get from Homebase, which is tracked by a lot of smart economists out there. The risk to that, though, is that ignites another bout of Treasury weakness, another bond rout.
How's the market set up for a stronger number? I guess the stronger number, because the whisper number was 185, circa, kind of around there. Is the market set up for an upside surprise? Is the risk to what's the risk to a downside surprise? Kind of just give us the kind of various reaction functions that we're going to see play out once this number drops?
Look, the risk to a hot print is clearly focused in the Treasury market, but that could also ignite another bout of this U.S. exceptionalism trade, right?
Yep.
A stronger dollar, money flowing into the U.S. equity market. That narrative of the U.S. really being the only developed economy out there who is running above trend will continue to gain steam. If we do get a downside number, though, I mean, you can put those bond route risks to bed for a moment. Maybe gives the UK government a bit more headroom and where they go forward. The same thing for France, same thing for any emerging market economy who trades at a spread to treasuries. Maybe that narrative gets put to bed for a while because, look, we have had a string of hotter than expected U.S. data, and we're waiting for something to maybe buck that trend. But I do think, you know, many out there are positioned for a hot number. They like to be exposed to U.S. assets. They like owning the dollar.
Just get us up to date, Val, on this yen story. We talked about the raised inflation forecast on rice. What are you going to be looking out for today?
Look, the Bank of Japan, their meeting is on January 24th. But I think the very interesting thing about the, let's call it, another round of verbal intervention today is it was at a very similar level to where it came on Tuesday. 158.50 seems to be a level that the Bank of Japan, that the Ministry of Finance, has their eye on. And this guy, to the point of where the positioning is, if you are positioned in a dollar long, a Bank of Japan hiking earlier than expected is one way to really dent that trade. And perhaps, at the same time, a Bank of Japan hiking more than expected, the anchor that JGB yields are globally continuing to rise. That could be, a further headache for the bond market.
A few wild cards out there that we should watch out for. We've also got CPI and PPI coming through next week in the United States. So we're going to watch the payroll number today carefully. But inflation seems to be firmly back in focus, so that data is going to be something we need to watch out for. Before we get there, though, we do have a weekend. It's about to start for us to get up early in the morning. Dubai Marathon, if you're running that, good luck. The Australian Open is something to pay attention to. You've also got the women's downhill in St Anton this weekend. So Lindsey Vonn hasn't raced for 6 years. She's back. It's her first World Cup as a downhiller. She's 10th fastest. I think she's 40. I think it's an incredible story. She's had knee surgery and she's back. Silence.
I was going to say, I'm ready to talk about soccer, but you kind of, Lindsey Vonn does have an admirable story there. I want to talk about Real Madrid and Barcelona. That's the one I'm going to be watching this weekend. That's the soccer story that I've got my eye on.
Hey, I'm excited about watching the Australian Open because
Yeah.
I do have a Sky Sports subscription now because I wanted to watch the World Dart Championship last Friday. Can I note that one? I bought the streaming service. Might as well watch the Australian Open now. Exactly.
Just for the darts, you can get the tennis as well. The Madrid-Barcelona game, that's going to be in Riyadh, though, which is incredible, the fact that they're going to have this game taking place in Riyadh. It's out of Spain. A lot of criticism around what Spanish football has done around that. So watch out for that one. I'm going to see what happens in St Anton. I think Lindsey Vonn coming back is an incredible story, incredible sporting story.
Maybe we'll make a little bit of a bet in the commercial break. We'll see how it goes.
On the darts?
Maybe on all of it. I don't know. I'm feeling risky. Valerie Teitel, we thank you so much. Speaking of the weekend, of course, be sure to catch up on Bloomberg's new Weekend Edition, where we bring you a collection of interviews, ideas, and stories that explore the fascinating places where finance, life, and culture meet. This is Bloomberg.